Hello, this is Patrick White from AA Commodities and Investments with your Thursday, August 22nd market recap video here. As you can see, we had a mixed day with the grains higher and the oilseed markets lower. I'm going to go ahead and get it started with a disclaimer. Just remember that everything I say here is just my opinion and there's no direct trade recommendations, anything like that. If you'd like to read the full disclaimer, please pause the video now. All right, so as you can see here, we had corn fractionally higher here. We had D's corn closing up 0.75% at 371. November soybeans closing down 4 1/4 at 868 3/4, and D Chicago wheat closed up 3 3/4 cents at 471 3/4. Going into the chart, we had D's corn. It's kind of a two-sided trading day. Really, not a whole lot of news to push this thing around. We did trade lower, earlier on the week on the the ethanol demand story with Poet there, and we really haven't found new sellers from that. So, just lightly, light short covering going on right now. And I think that kind of matched up with the wheat market here, but we're kind of just going sideways. We're just going nowhere fast here. We are just, about 7 cents from contract lows here too. So, a little bit of bottom picking action in the corn market. Nothing too exciting there. It doesn't show signs of a reversal at this time. And, we're just cautiously waiting here, cautiously bearish at this time on corn. On the soybean side of things, kind of interesting here this morning. We had an announcement that the Chinese had bought one cargo of soybeans, and it was a pretty small sale, and people were wondering if that could lead to other bigger things. Also, we had reports of just lower pod counts and stuff too from the crop tour, from the Pro Farmer crop tour going across the Midwest here, and really, soybeans came in early in the morning. They were up as much as, I believe, 8 cents here, and we tested this 880 mark. We found sellers, and sellers took control from there. So, tested this old resistance level at 880, sold off from there, and we're back inside of the range here that we've seen for basically the last 4 days. And yeah, really kind of interesting. They really can't get a close above this 872 to 875 resistance level. They hit the 880 resistance level today. So really, we're just caught sideways, kind of like the corn market. And really, I just wanted to show you. As well, just without, this is the November soybean chart again, just without the support and resistance lines. And really, we're just kind of making a triangular formation. We're just trading down, and we still got the uptrend sort of intact there. So, with that being said, we couldn't get anywhere fast. If we do break out of this triangular formation, we could have a decent sized move. And if you'll notice, we kind of broke out of a little triangular formation here to start this move. So, that being said, if we can get a convincing close above like 880 to 885, we're probably going to head back up to the $9 mark. But if we do break down from here, we could probably head down to this 845 level. So those are the two levels that I'm really looking at. The wheat chart here, December Chicago wheat got our flush below 470, and we failed to find new sellers down there. We're just seeing some short covering in the wheat market there. Try to get a close above 470 today. They got the job done. I would look for retracement rallies up to like 483 to 485 or so. And, just really, I don't think there's a whole lot of fundamental information to rally wheat at this time. We had export sales out this morning, and it wasn't really that impressive. And I think just by and large, the U.S. is still overvalued for wheat. There's not really a whole lot of, big weather story or big demand story, anything like that for U.S. wheat. So I think the path of least resistance is lower here. But with that being said, it looks like we could be getting into some short-term supportive type of action for the wheat market. Going on into livestock, kind of an interesting day here. Yesterday we tested that 101 level in October live cattle. Went up and tested 101. Today we got to close above it at 101.10, and that's the highest close since the 13th there. So I would look if we can break above this 101 level. I would look for it to rally further above above 101 to 103.50. So I would think that would be a good resistance zone there, and that lines up with the lows seen in late May and mid to late June there. So I think we're poised to head to 103.50. I think that the market eventually is going to shake off the loss of demand there from the Tyson plant, but it could definitely take longer though than people think to get that plant back going. But by and large, just the industry has done a good job of replacing that capacity with other plants working overtime, things like that, and they're incentivized to, because they've got really good packer margins. I've heard anywhere between $350 to $750 a head. So with that being said, when they're making that much money per animal, well, they're really incentivized to keep buying cattle, and that's why you've seen the bid up in futures here these last couple of days. So I would look for this to to get back up to that 103.50 if we can hold above this 101 level convincingly. So, and on to the opposite of that chart would be the hog chart. Yeah, today really was not a very good day. We didn't have a very good export sales report. No purchases from China, anything like that. They're keeping us out for now. Went down and tested the $62 level and couldn't get a close below there. And if you'll notice, this is our third reference point here for this $61.50 to $62 level. This is a pretty key level in my viewpoint. If we break this range, we're probably headed down to the 58 level, which is the contract low. There's probably a little bit of support there at the $60 mark as well. It's got to be psychological. But yeah, with that being said, we've got the contract low here at 51, or 58.20, excuse me. 58.20 is the contract low there. So, I would look if we were to break this 62 mark to go down to that 58.20 level. Just on disappointing export sales, we haven't had the demand that we've needed to see in order to get a strong rally in the market here. So, with that being said, this market's just being crushed under the U.S. supplies. Going on into the cotton market here, December cotton. It's up here. December cotton went up and tested the $60 mark. We had a high of $60.05 on the overnight. Market faded that from there, and just traded lower all day. And we're still inside of the range here between 58 and 60. The reason why we traded lower here today was we got 1 to 2 inches of rain there in the Texas Panhandle, so that's going to help their dry conditions considerably. In addition, we've got the 6 to 10 and 8 to 14 day forecasts that are still showing some decent sized rains coming in into the Panhandle of Texas there. So starting to improve conditions there, and markets need declining conditions in order to justify rallying. If they don't, they'll either go sideways or lower. So with those rains and what should be improving conditions in the Panhandle of Texas there, we should either continue inside of this range, or we could even break below it and go lower. So we'll see what happens there, but cotton's inside the range for now. So that's about all I got, guys. If you have any questions, feel free to give me a call at 712-262-7606 or visit my website here, aa-commodities.com. You can sign up for our newsletter there. I give out free trial there for you. You can sign up anytime. And hope you guys get a lot done today. And thanks for watching. Appreciate it.